Canadian bank earnings started with a beat for Scotiabank, but valuations may be a concern for this sector going forward. And according to our next guest, for more on that and some other banks to consider instead, joining us now is Brad Radin, portfolio manager and head of international equities at Nicola Wealth. And you're in studio. It's good to see you. Good to have you in.
Nice to see you.
Scotiabank beat estimates this morning. I'm wondering, first off, kind of your thoughts on that.
Yeah, it was a good quarter for Scotia. They pretty much beat across the board, beat consensus, beat their year-over-year number, and all sectors were firing on all cylinders. Really, capital markets performed well, wealth management, traditional Canadian banking, and they also did a nice job on cost containment.
We've got the other big banks reporting, of course, over the next couple of days, the big five, at least in Canada. Are you expecting kind of similar results from them?
I think broadly similar. I mean, the banks are all fairly similar. They're different, of course, but fairly similar. I think the key things that investors will be watching will be credit quality. For any sort of sign that there's a deterioration in credit quality, Scotia had a slight deterioration, very slight, not sort of meaningful, but with bank stock investing, we always have to be hyper vigilant about credit quality issues. I think the other issue will be just underlying core growth in terms of the traditional Canadian banking business. It's fairly low growth, and will the banks be able to
keep that momentum going, kind of thing?
Momentum, yes.
Is it a good idea, do you think, for investors to be looking at Canadian banks right now and Canadian financial institutions as an investment?
They're very well-run companies. They're high quality. They're solid. They've got a nice moat around the business. The one kind of knock against them right now is they're fairly richly valued. Not ridiculously so, but about 30% above their 10-year kind of historic average. So at the expensive-ish end of things, but not ridiculously so.
You in particular, you like some international banks. So I'm really interested to hear about some of the ones that you have. Let's start with some Spanish banks that you like. Tell us about what you maybe prefer to go to.
Sure. So, I wanted to talk about these Spanish banks because clearly being based in Canada, we hear a lot about the Canadian banks. Canadian banks had a great year last year, plus, 40%-ish on average. But there are many other banks around the world, and some of them have done really well. So a couple Spanish banks that I own, Banco Santander and BBVA, and the international stock fund that I run, and they had a fantastic year last year. They were up, triple digits and have been very, very strong and are actually less expensive than the Canadian banks and have sort of different avenues for growth. Santander is just putting a bid to buy Webster in the U.S. And both of these Spanish banks have a great amount of business in Latin America and the rest of Europe. And it really gives them some additional avenues of growth. And that's why we like the Spanish banks and just are worth considering beyond the Canadian banks.
So you like the Spanish banks. There's also a couple of Japanese banks that you like as well. So tell me about the two picks that you have in terms of Japanese banks.
Sure. So I own a couple Japanese banks, MUFG and SMFG. They're the two largest banks in Japan. And the Japanese market has really been doing nicely over the last several years. And they've just elected a new prime minister who has a supermajority, is a very growth-oriented platform that she's promoting. And the Japanese banks have historically had exceptionally low net interest margins, just rock bottom, but they're building off of that. And there's a lot of room to still expand those margins. And that's going to drive some pretty solid growth over the next several years, and the valuation levels are slightly lower than the Canadian banks.
Interesting. Okay, so some good alternatives, I guess, for investors. Going back to some earnings reports that we've got this week, obviously all eyes on Nvidia, or many eyes are on Nvidia's earnings, which are coming out tomorrow night. What are your thoughts on what we could see? Is this an important quarter for the company, or do you think we'll see kind of more of the same when it comes to growth?
You know, it's important in the markets right now in terms of the overall AI theme is clearly close to dominating everything right now. And there's a lot of push and pull right now with that theme, a ton of CapEx being spent. The interesting thing about Nvidia is it has been flat for the last 4 or 5 months. It's kind of gone nowhere, despite being right in the, center of this market dominating theme. And the interesting thing is there are some other AI related companies that are kind of slightly peripheral that are still moving up tremendously. So some of my best picks last year were a couple of companies in South Korea, SK Hynix and Samsung Electronics, who both had triple-digit returns last year, feeding into the AI theme at lower valuations and better growth. They're focused in the memory space, and I guess my point is that that theme got so crowded in the U.S. That a lot of investors have started to look elsewhere for ways to play that AI theme.
And potentially why Nvidia, as you say, like there hasn't been much movement over the last couple of months. It's kind of stayed where it is.
There's a debate going on about whether this CapEx cycle is sustainable. I mean, $500 or $600 billion with the big companies in the U.S. on CapEx per year is an enormous amount of money, truly an enormous amount of money. And investors are concerned about whether those companies spending that kind of money will ever be able to generate a decent return from their investment in CapEx.
A lot to go over. That's all the time we have. Appreciate you coming in studio. Thanks for your time.
Thank you.
That was Brad Radin, Portfolio Manager and Head of International Equities at Nicola Wealth.